Alright guys, so the EV war has taken quite a turn. For over a year, we have seen the West try to contain China's rise. We had some of the biggest tariffs imposed by the G7 on EVs coming from China. It's a combination of fear and panic leading to extreme protectionist measures. The US and Canada have imposed a 100% tariff. In Europe, the tax can hit up to 35%. If you're a Chinese brand, you are highly discouraged from exporting to Western markets, which makes your decision tree very simple here. You can always export to other economies like Brazil, or you can find a loophole to export to Western consumers. Now, by all measures, Chinese EV brands are already winning the electric war. The cars are cheaper, they perform better, and the technology is simply superior. Now, when we think of EVs, many of us still believe Tesla is the best. Well, I can't fault you on that. Elon Musk is on the headlines every single day parading around with Trump. But let's look at the numbers here. In Q3, China's BYD overtook the revenue of Tesla. They sold $3 billion more in electric vehicles. In fact, the company delivered more than twice the amount of cars, 1.1 million vehicles to Tesla's 460,000. Now, this epic rise tells us quite a few things about the Chinese ecosystem. Just one company has enough demand to sell a million cars a quarter, and they have the supply chains to build and distribute the cars. Even without the US market, this is critical. Even without the US market, BYD has overtaken Tesla. But just like any company, you want more. That will mean getting your cars to EU consumers and US customers tariff free one day. But how can China do it? Well, why not buy factories in Germany? And this report is stunning. Chinese buyers are interested in buying unwanted German factories that belong to VW. And these factories are slated for closure because obviously car production there is dropping. Now, this might seem like a blow to German pride, but for China, it's simply a business decision. Now, this would be even more controversial than the takeover of US Steel by Japan. If Chinese companies take over these factories, they will be able to build cars within Germany itself, and that would mean avoiding EU tariffs and selling to the common market. But another reason why China wants a presence in Europe is to export to the US. Now, we know Trump would hit the world with a universal tariff of 10%. Now, that sounds steep, but it's still nothing compared to a 100% tax on vehicles from China. So, German factories might just give that loophole, especially if Trump decides to go after Mexican factories producing Chinese cars. So, why is Volkswagen collapsing? Why are their factories about to be abandoned? It all stems from the inability to innovate. As a result, their revenue in China is collapsing fast. Overall deliveries in China have dropped by almost 10%. That's a tremendous fall. Volkswagen is competing with more than 120 competitors. They are facing both a quality and a price war. When I was growing up, the phrase German engineering was always stuck in my head. My mom drove a BM and it was a solid car 20 to 30 years back. Now, I really loved taking it to school, but the world has evolved now. German companies are just too slow. The moves are far too cautious, especially when it comes to technology. The newer cars I see on the road, they are mostly Chinese now. German precision has to be replaced with speed, innovation, and risk taking. Because playing catch up is not a good strategy, and here's what we mean. Volkswagen's new models won't arrive until 2026. It's a new SUV, but it's in conjunction with another Chinese company, the XPeng. The Scout Traveler will be released only in 2026, and the ID Golf will be out by 2029, hopefully. Now, while German engineering continues at a snail's pace, Chinese brands are launching multiple new models every single year. And once again, the Germans are just too slow. We live in an ADHD world, guys. People swap cars faster than before. Volkswagen has a higher price tag, and the existing EVs are getting outdated extremely fast. Just take BYD's lineup in 2025 for example. This year alone, they will release up to 5 new models. Now, I browsed through them and the prices are extremely attractive. These are affordable EVs. Pricing is now extremely important. People want both quality and value for their vehicles. Volkswagen doesn't just have an energy problem, it's a structural issue that encompasses all of Germany. So, will China really buy over these plants? And as we said before, it all boils down to a math equation. If China assembles their cars and uses as little energy as possible, then building in Germany might make sense. Remember, they could always export to the rest of the G7 from here. On the other hand, would it make sense for Volkswagen to sell their factories? Maybe it does indeed. According to bankers, selling the factories could recoup anywhere from 100 million to 300 million euros. It might be better to sell them to China than to just close them down. Here's the reality. If you plan to fight in a competitive market cornered by China, you need to be fast and you need to be nimble. If you can't beat them, maybe it's time to join them. But it's not only the Germans in trouble. The US or Trump just made a very terrible move, a bad decision that will give the future of EVs to China. It's even worse than Trump launching his meme coin. Trump has ordered the US to eliminate subsidies and other policies that favor electric vehicles in a country. Now, I don't think even Elon Musk predicted this. Tesla is in some bit of a trouble. Let's not forget the EV situation in the US. Because of the tariffs on China, affordable EVs are not coming into the country. Consumers have to buy more expensive variants from Tesla, Germany, and Japan. And now Trump wants to take away the subsidies. This is crazy. What do you think it would do to consumer demand? It would most definitely plunge to hell. Buyers of electric cars in the US today enjoy tax credits up to $7,500 on a new EV purchased. And if it's a used car, it will be around $4,000. Now, the tax credits also extend to home chargers and energy storage units, so the subsidies aren't only for the vehicles. Well, these tax credits could evaporate very quickly. And who's going to benefit from this? Let's just trace the incentives. Well, legacy car makers and big oil. These giants would be the biggest winners from Trump's cancellation. It's also weird from the perspective of reshoring production and trying to win the EV race against China. The Chinese EV ecosystem is already so advanced, there's simply no way to catch up unless the US commits to spend a ton of money. Now, Trump has also revoked Biden's EV target, the goal to get to half of all new vehicles sold to be EVs by 2030. Well, that's gone. Now, I understand that EVs in the US, they aren't practical for every situation. But consider what's going to happen in the next 10, 20, or 30 years. The US would give up the future of electric vehicles to China. And what comes after that as well? Well, this could save Ford and GM today, but tomorrow would be very ugly. Now, over the years, the EV subsidies have been effective in driving adoption. In 2020, only 2% of new sales were electric vehicles, but in 2023, this went above 10%. It's a good trajectory considering the US doesn't even have a robust charging network yet. But all that progress is about to be rolled back. Now, if you're a legacy car maker chasing profits, you'll want to stick to ICE vehicles. What's the point of developing EVs now that Trump is back? You simply won't.
With my actions today, we will end the Green New Deal and we will revoke the electric vehicle mandate, saving our auto industry and keeping my sacred pledge to our great American auto workers.
So you heard what Trump said. Now I find it very hilarious that he said it in front of Joe Biden's face, basically ripped apart his plan and burnt it to ashes. But from an economic war perspective, this maybe isn't a good idea. Trump wants to attract industries back to the US. However, production follows the incentives. It will be hard to attract EV makers into the United States as well. The oil industry today is the focus. So US EV supply chains will get weaker while the Chinese supply chains will keep growing stronger. In July last year, China hit a historic milestone. Over 50% of all new cars sold were electric vehicles. That's 5 times the US, and China has the world's biggest car market by a huge margin. Once again, production and innovation follows the incentive. This is the key phrase here. China's EV subsidies are still around. In fact, they are increasing the amounts. So Chinese automakers would start creating better and more efficient vehicles. That's why Trump cancelling the mandate is a mistake. the gap between China and the West will continue to grow wider and wider. And another big consideration are the supply chains. If we look at who controls clean energy metals, China is leading. The majority of refining is done within the Chinese ecosystem. Nearly 60% for lithium, 90% for rare earths, and 65% for cobalt. While China doesn't directly control global production, they have big influence over it. Chile, Congo, and Indonesia, these are big economic partners with Beijing. Chinese companies are building and operating the mines. So the supply chains are controlled by the Chinese. And because Trump is taking the US inwards, companies are not incentivized to look outwards and invest overseas. This creates a very problematic situation. How can the US advance the EV industry under Trump? I don't really see a way out for this one. There's also another crisis looming. Trump is on the brink of punishing China. Now, he could impose a 10, 20, or 60%, for all we know, 100% tariff on all Chinese imports. And mark my words, Beijing will retaliate back. In December, China banned a bunch of critical minerals. This included gallium and germanium, essential minerals for the US military and semiconductor industry. Now, the signs are all there. It's written in the stars that China will weaponize their supply chains. There are just so many critical imports the US needs for EVs. There's cobalt, lithium, nickel, and graphite. Between China and Russia, these two countries controls them all. So it's going to be one big ugly mess down the line. Trump has essentially traded in the future of EVs for big oil and gas. It really leaves you wondering how the US can effectively take on China. Beijing is advancing to the future of industry while Washington is taking gigantic leap backwards. Now listen to Trump complaining about the EU not buying US cars.
China's an abuser, but the European Union is very, very bad to us. They treat us very, very badly. They don't take our cars. They don't take our cars at all. They don't take our farm products, essentially. They don't take very much. We have a $350 billion deficit with the European Union. They treat us very, very badly. So they're going to be in for tariffs.
There's a reason why the EU is not buying American but buying Chinese. It's because of both the quality and cost. In addition, the EU wants the majority of car sales to be EVs by 2030, around 70 or 80%. If the US doesn't produce efficient EVs but China does, then there's only one supplier left in the world. So there are second order effects to everything. The new US economy will be a very bizarre one. There will be huge winners and big losers, and the EV industry belongs to the latter. But as always, let me know what you think. Will China buy factories in Germany? And did the US really make a good, a wise decision, or is this really horrible? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.